Welcome, everyone. My name is Cliff Grossner, and I lead the Cloud and Data Center research practice for Omdia. And I'm here with my colleague, Vladimir Galibov, who I'm going to ask to introduce himself.
Hello, hi, my name is Vlad Galibov, and I look after data center IT at Omdia's Cloud and Data Center research practice.
And we're both very happy to share with you today the results of a market impact assessment that the OCP asked us to do. And I believe this is the third in a series that we've done on behalf of the OCP. And this year we have updated our analysis from last year to cover 4Q18 to 3Q19 actuals and the 4Q19 forecast, and then extend our forecast out to 2023. I also have to share with you the results of our survey that we did with some new questions. And the survey that we did was looking at end user perspective around incumbent telcos and co-location providers. We also interviewed vendors that could be all the way from OEMs and to ODMs. We talked to some startups, some system integrators, and also talked to the white box vendors. And you'll see here on the slide, the background says that the Open Compute OCP commissioned IHS Markit. And it is true that at the time that we commissioned this study, we were IHS Markit. We have now moved over to be part of Informa Group, specifically Informa Tech, and we are now branded Omdia going forward. And just to make sure everyone is centered in the context, we, in this impact study, only look at OCP non-board member spend, not at the full board member, full market. So with that, I'm going to turn it over to Vlad, who's going to talk to us about the different categories and the overall results, covering servers, networking, storage, peripherals, rack, power, and a couple of other subsegments of the market.
Thank you, Cliff. And as you can see straight away, the OCP community has influenced $3.6 billion in 2019, a very impressive result. That's 1 billion extra market revenue compared to our assessment in compared to 2018, which we have finalized over the last course of this assessment. And we actually saw that 1 billion extra revenue be driven across market segments. And I'll get into that in a second. It was also driven across categories. You can see that on the slide, we've highlighted that the 3.6 billion is comprised of server, storage, network, switches, rack, power, etc. And the other category this year has been expanded, and it now includes cell-side gateway, which we have seen a very strong adoption for, and also the open accelerator module, the coprocessor which the OCP has been working on. So this has been a positive impactor on the bottom line for the 3.6 billion. Of course, a small share out of the total market, since these are new initiatives. It has also impacted the total market value, which has been increased by a few billion to 160. So at this point, the OCP is influencing just over 2% of the total IT equipment value that you see here, and physical equipment. So if we take a look at what this means in the near term and in the far term, we expect that in the near term, within 2020, the growth will continue. In fact, the growth for 2020 is slightly stronger than what we saw for 2019. And this is because we have a very good pipeline of POCs. And some of the POCs is for some of the new equipment that the OCP has been working on, some of the new specifications. And we expect that there is going to be good demand for those. An example, as I already mentioned, is the cell-side gateway and the open accelerator module. But here, think of also the open edge initiatives and some of the form factors that were introduced there. Of course, we can't talk about 2020 without mentioning the reason why we're virtual and the reason why we're all working from home and living in a close to lockdown conditions. The current forecast that you see there was a market assessment before the COVID-19 pandemic started to impact the global macroeconomic um, environment. But I think it's important to understand that our forecast for growth has a good balance of cloud service provider demand, telecommunication network provider demand, and enterprise demand. We do expect that overall enterprises will be more impacted by the COVID-19 pandemic because there are certain sectors that will have a huge loss of revenue. However, we have also seen some positive impacts on the cloud service provider demand. There's been incredible demand for work from home services, for homeschooling, cloud gaming, and video streaming, etc. All of which we expect could lead to tier 2 cloud service providers, hyperscale cloud service providers investing in more equipment. We also think that there could be a upside to the telecommunication network provider demand. So at the moment, the demand from the two service provider categories is offsetting some of the enterprise weakness. So as a result, I would suggest that this is in fact a balanced forecast that takes into account the macroeconomic risks. Looking at 2023, we expect that will be just over 5% of the market, which is similar to the growth that we thought we'd see before. So what is driving this growth? From a product category, IT infrastructure is the majority of the revenue, and that shouldn't surprise us. This is a similar result as the survey that we had last year, particularly within the IT infrastructure. The server category contributes over 2/3 of the revenue. You can see it on the very bottom part of the bar chart. And there has been a lot of significant demand for servers, OCP servers, but also it is a comparatively more mature product. Some of the storage and switches products and other products within our categories have followed that category. So we shouldn't be surprised that today this is generating more revenue. Going forward, you can see that towards 2023, we start to see a more even spread starting to occur between the categories. And if you looked at the growth per specific category, some of the new categories that we have added are driving stronger growth on an annual basis within the horizon. Our interviews showed that sell-side gateway projects specifically are pushing ahead very well because of very good development of the software ecosystem. And we also saw that, as I mentioned, the Open Accelerator module, but also the Ethernet adapters are very well received and are going to be used not just in Open Compute servers, but also in servers that are non-OCP. So there's been broad market interest in those component categories. I can't not mention storage because our forecast for storage is one of accelerating revenue. And this has to do with the amount of JBOF, or just a bunch of flash, that is present in the Open Compute equipment specification today and the designs available today. We have seen strong demand for SSDs and NVMe connected SSDs at the enterprise and also at service providers. So of course, this is driving good pull for that category. So if we can move on, Cliff, and take a look at the regional perspective, you see that overall the trends are similar to what we saw before, but there are some slight important differences. So first, for 2019, EMEA did show very good growth. It, I would say, surprised us with how good it grew. We saw a lot of interest in EMEA in the circular IT, in a more green economy, and in lower power consumption. In fact, I was just reading the UK ICT budget plans for investment, and or I should say the UK government plans to invest in the ICT equipment, and what the government has really hammered down in their plans is a focus on power efficiency. And I think that this is really going to be a force for positive demand within the EMEA public sector for OCP equipment. I can't not talk about some of the disappointments that we saw. We expected that in 2019, we would see Asia Pacific adopt open compute equipment, and specifically hyperscale cloud service providers in Asia Pacific in a larger volume than what we anticipated. And this is not necessarily occurring at the rate that we originally anticipated. And when we talk about Asia Pacific, it's important to also look at the going forward momentum. Going forward, we do expect that there will be pretty good demand from enterprises, from tier 2 cloud service providers, and I do expect that eventually non-board hyperscale cloud service providers will be interested in open compute equipment. In fact, the Open Accelerator module was adopted by Baidu very quickly. So overall, a good demand. Of course, today, we should not be surprised that Americas are at the heart of OCP deployments. This is something that we've seen before, and we accept that in the foreseeable future, it will continue to be the largest region for open compute equipment. And talking about the Americas, let's take a look at some of the segments that are particularly interesting within the North America region. The telco market segment was very interesting for North America. And we heard of large-scale deployments of open compute equipment today in centralized data centers and also in co-location, specifically to serve the telecommunication network provider market. But we also have heard of very good traction with proof of concept with telecommunication network providers in North America for the open edge servers and racks specification that was published this year. So we expect that this will have a nice pull going forward over the horizon. And I think one interesting learning for me during the process of reassessing the market was that the POCs for the open edge servers and racks are not only occurring at telecommunication network providers, but also at enterprises. There's been good interest from enterprises in deploying more compute at the edge. I think this is something often overlooked in the industry, but you should not underestimate the amount of demand for from low latency enterprise application that would require edge computing. And when we look at the market segments, a few last notes is there was it is important for the growing for the growth across the equal growth across market segments first to see availability of OCP certified co-location facilities. That would be a big requirement that would drive the telco and the tier 2 as cloud service provider forward. And also for the enterprise market. So here you see the breakdown of the enterprise market. And this year was a telling year for the enterprise, a year that showed that maturing is occurring within the enterprise market segment. In the past, the financial enterprises used to make a very large portion of the OCP non-board revenue, much larger than what we had seen in the traditional market for most equipment. And this year we saw right sizing occur. In essence, it is contributing a more regular rate compared to the purchasing of equipment in non-OCP markets. And within the year, there was very good demand in the government. As I said, there was also good demand in gaming, e-commerce, and energy. There was some very interesting demand drivers that were highlighted to us in HPC as well, across the different market segments. I have to say that we did hear, and I'm sure we'll go into it in more detail soon, but we do see that for the enterprise market to continue to grow at the trajectory that we're forecasting, it is important that we see system integrators really become an intrinsic part of the OCP ecosystem, because they are key to satisfying enterprise demand. And I believe that this is my last slide. And of course, I'll welcome your questions at the end of the talk.
Thank you, Vlad. And what I'd like to do in the 10 to 15 minutes I have left is take us through some of the specific survey results we had when we talked to the OCP vendors and end users. And this year, we increased the number of respondents we talked to 21. But please be aware, these are respondents that are leading the charge in the marketplace. And this is not intended to be a large study that's based upon a bell curve to get a result. This is really selecting very specific thought leaders rather than random sampling. So with that, I wanted to talk to you a little bit about one of the questions that we always have to ask, and that is, what type of customers are we seeing the greatest interest in? And this year, we did see some new things that we didn't see from last year. Of course, we saw some of the same things carry over, but what was really interesting to see was the rise of the co-location provider in terms of their role in helping the OCP certified equipment become adopted. We also saw the expansion of the telco opportunity, as Vlad mentioned, to include the cell site gateway, which was going pretty well. And in fact, we saw that that is maybe even going to surpass the PON initiative because of the strong ecosystem that's available to support the cell site gateway and disaggregation. And we also heard from some very prominent telcos that are leading the charge that now that they've, in their mind, tackled the cell site gateway, the next area for them is going to be core routing. We also saw, from a vertical perspective, gaming and high performance compute take a strong look at OCP certified equipment, really kicking the tires to try to determine if it can help them with computing at scale, just like it has the hyperscalers. I mentioned the co-location providers, and we saw for the first time that some co-location providers have become certified as being able to handle OCP certified equipment and providing an alternative to enterprises that are running data centers that aren't yet able to handle OCP equipment. The other areas that came into the discussion with our respondents was the open edge that Vlad mentioned that was getting attention in new verticals such as energy, and that would be specifically oil and gas. The question we asked this year was, what are the top reasons for adopting Open Compute certified products? And we saw some new things come to the top. We also saw some things repeat. So very strongly, same as last year, capex reduction is a big part of the driver. And then open design as well. But open design, we went a little bit deeper this year, and what we found was that some of the providers or some of the users were looking for the ability to customize at scale, and also the ability to choose or change suppliers. These were pretty important, as certain features that work in the small don't work at scale. For the first time, we heard that in some ways, OCP certification, or having the capability of working with OCP certified equipment, was a differentiator in the marketplace, either for the supplier trying to differentiate their business, or potentially for co-location providers wanting to be able to offer the facilities. The other thing we heard and learned was that for global companies, it is sometimes cheaper to have each individual piece of equipment be a little more expensive. but have that same piece of equipment be able to be installed without modification across the globe, in which cases, some parts that are chosen may be more expensive than other parts that you might use in particular areas of the world, but they are components that are certified across the globe, which makes the entire proposition better. The other elements we heard as strong drivers were the desire to have automation. Automation is enabled by the software stacks that are used to manage OCP certified equipment, which really simplify maintenance and downtime. And this year, we also saw a strong discussion emerging on the desire to go green, as Vlad mentioned, but also the emerging circular economy. And for those of you that aren't aware, for a circular economy, what we're talking about is the ability to take racks that have been installed in hyperscale data centers, been installed for their useful lifetime of 1.5 to 2 years, have been removed, and can then be recertified to use more traditional software stacks that other end users might want, such as those from VMware or those running Windows or et cetera, and then be reused. And then these racks are still good for a number of years. Moving forward, we also wanted to ask a similar question that we ask every year around the barriers for adoption. And we did hear some of the same things, which is important for us to know, that enterprise class support is still the strongest barrier for OCP adoption going even wider. Some of the other things we heard from the vendors that we talked to was that really OCP, even though we may be very familiar with it, that equipment isn't really that known in many corners of the market yet. And that means that it's perceived as having a higher risk. And because of the way OCP equipment has to be operated in order to get the benefit, it forces operational change that some enterprises or other end users just aren't ready to take yet or have to invest to make that change. So that lacking enterprise class support that I mentioned means that what we found was there are a few local supply chains that are springing up that provide support and warranty, along with local replacement upon failure. But the problem is there are only a few so far, and we need more. Many of the users want to buy a fully integrated rack, and they find that those options help them a lot, but sometimes the integrations don't offer a lot of choice, which slows them down in moving towards OCP. The other elements that came up to the top, and this one I think we heard from last year as well, is that interoperability was very important with existing infrastructure. And even though some co-location providers have managed to certify their data centers as being capable of holding OCP equipment, there's still only a handful, and the market is looking for more of that. One of the things we wanted to find out this year, this is a new question for us, is what stage were the respondents or the end users in their IT journey? Were they very digitized? Were they still using very, very manual processes? Had they adopted the cloud? What types of architectures? And what we found was most of the adopters of OCP equipment have been virtualized for a very long time, part of the early wave of virtualization. They're strong users of DevOps techniques and are already far down the road in terms of their adoption of software containers. And many of them also make use of both hybrid cloud and multi-cloud architectures. We did see some end users that were on-premise only, which at first was a little bit surprising, but then we realized that many of these are high-performance compute installations, which tend to be enterprise operated and on-prem, so that makes sense. We also did see some call for bare metal servers, but that was a much smaller part of the market to date. We did ask what was the technology roadmap for the vendors, and also what were the end users' interested in seeing from the latest OCP equipment. And no surprise, edge-ready equipment was by far at the top of the list. We saw specific target design start targeting location-specific designs, and we saw network-attached storage was important, especially when it was focused on migration of VME over Fabric on Ethernet. Other enhancements that were in the pipe were looking at liquid cooling, whether it was enhanced cooling around immersion and liquid fluid designs. One of the other questions we asked was, how were people buying with deployments outside of hyperscale CSP? And it really turned out that an integrated rack was really what the community could absorb today. There was some factory direct, but only for those that, like hyperscalers, could work at scale or had the skill sets to make use of it. One interesting note was this concept of data center as a service. Because the capital cost of the circular economy is so much less than new equipment, it became feasible for certain suppliers to say, we'll actually put the rack in your data center and you can pay us as you go. The capital cost as a barrier for smaller scale became more feasible. Of course, we had to ask about edge. And here we asked the respondents, in terms of the projects they were involved in, what stage were they in, where they would score a 0 for no discussions, 1 for in discussions, 2 they were in POCs with initial deployments, or 3 was initial deployments, 4 was ramping deployment, and 5 was the projects are fully done. And what we saw here was that where we looked at the co-location facilities, we looked at the enterprise edge, the telco edge, that all of the respondents were expecting an increase in the deployment stage going forward. We asked them what stage they were in now and what stage you'd be in 2 years from now. And also, no surprise, we saw the central DC move down a bit as compute is expected to move out from the center to the edge. But the centralized data center still maintains significant importance going forward. The last question I believe I have is around what type of workloads were the end users running. And clearly they were focused on compute intensive workloads where they wanted racks that had high compute density in the 15 to 30 kilowatt range. We also saw general purpose computing was very, very important. And for certain segments of the market, of course, telco, we saw packet intensive being important. And for HPC, we saw memory intensive being important, where AI intensive is still not the majority. I do have here some memorable mentions that I wanted to leave with everyone. These are snippets that we pulled out that were actually mentioned during the interviews, from the fact that some vendors said that some end users had the mistaken belief that OCP certified equipment was only for huge companies, not for them. And so we had to take that myth needed to be taken off the table. And other things included that there's tier 2 CSPs in Japan that have deployed 1,000 servers and planning to do 1,000 more in the near future, telling us there's going to be good growth. We saw also a lot of edge conversations that the OEMs say they're having, where they want to help look to the OCP to drive standardization around edge deployments. So with that, I think we're almost done, and I want to invite Vlad to come back in and help us wrap it up with some top takeaways.
Thanks, Cliff, and I hope that you guys found this interesting. We certainly were very pleased with some of the feedback that we got during the survey. I think if there's a few things I would like to leave you with and imprint in your mind is that, first, this market is growing really well, and non-board member revenue has increased by $1 billion this year. So at this point, we're getting closer and closer to the $4 billion mark for the open compute market. We to be able to drive the next 6 billion, we really do need to have improvements in how people can get their hands on the OCP equipment and how it can get supported. In other words, an improved supply chain. We talked about investment in co-location, facilities that telco, tier 2 service provider, and enterprise servers can be located at. We also talked about support and system integration. These are important for us to be able to grow. We also, but overall, we do expect that there is still a credible path for OCP to influence 5% of the total market, which we think is a very good result for 2023. And it is important to note that from a market segment perspective, the telecommunication network providers and enterprises, especially in the public sector, are really looking at open compute gear. So we expect they will continue to be very active in this space. And Edge is probably one of the best examples where telcos are moving much faster than we anticipated. So we expect that those POCs that started already in the end of last year will move into commercial deployments very soon.
Well, thank you, Vlad. And I just wanted to leave everyone with a last thought that, again, we see the market showing healthy maturation since last year. I said that last year, and I'm saying it again this year. We do see the early embers of an emerging supply chain, and we believe the circular economy will be an important catalyst for that supply chain. We also see that OCP certification and hyperscale-driven innovations are seen as a differentiator in the marketplace, something new we didn't see last year, which means that while some people still don't believe OCP is for them and only for scale, there are others that have figured out how they can leverage it for differentiation. We are seeing that sales are via SI and VAR fulfilled deals on integrated racks, and those continue to grow, and that's good. And the growing edge discussions and POCs we think are paving the way for the next wave of adoption. And with that, I want to thank everyone for listening today, and we'll open the floor for questions.
Okay, everyone, this is Cliff, and now I'm live instead of recorded. And we do have a few questions. One is asking us why the numbers have decreased in terms of growth from 2018 to 2019. And what I would tell you is this is a question we get all the time, and it's a very standard pattern with an emerging market. At the early years, you have a small market, and when you get an absolute growth of, let's say, 500 million, it represents maybe even a doubling. But once the market gets larger, a growth of 500 million or a billion is actually less as a percentage of the year before. So it's a very standard pattern that we see growth rates declining in an emerging market. It's a healthy pattern. That's what we normally see. So that's one question we have had all the time. So that takes that off the table. Vlad, there's a question here that you might be interested to start off with, and I'm happy to chip in after that. And that's about the performance of the OCP certified equipment market versus the standard OEM market.
So that's a really good question. I think that it shouldn't surprise the listeners that the OCP equipment market is performing better than the standard equipment, actually data center equipment market. And that is because the open compute equipment market is gaining share. For example, telcos that we saw purchase servers in 2019 that were OCP certified would have in the past purchased such servers from standard OEMs. There was a very similar story from government agencies, enterprises, and cloud service providers. It's not that these guys weren't buying servers in the past, they were just buying standard servers, and now they've chosen to buy OCP servers. So given that the open compute equipment market is starting from a lower base, it's growing significantly ahead of the standard OEM market. So from a market performance, it would be significantly better, and it is a new market. So that's something I would have expected. I just want to add something to Francis's question. Francis, this is a very good question, and I think one thing I want to add is that in a market that's young and maturing, like the open compute equipment market, sometimes one or two deals can also impact the growth rates within the year. And what we did see in 2019 was a slightly later than expected adoption of some open compute equipment by hyperscale cloud service providers like Baidu. So that is something that was delayed by a few months from our original forecast. I should stress that often we make these forecasts with very little visibility of exactly when a deal will close. So there was a little bit of that, but overall, Cliff is very much correct. Ultimately, the market grew very healthy. $1 billion of extra revenue, I think, is something that is very significant. It didn't really occur in the overall market in the data center.
Yeah, thanks, Vlad. And I think that all I would say is when we look at also the transitions that are happening around some of the new markets, around edge computing and 5G rollout, and now look at disaggregated cell site gateways and some of the plans we've heard about for disaggregated core routing, it's going to be an interesting number of years going forward. Right now, we don't have any other questions in the panel window, and we have a bit of time left. And Vlad and I thought we might use this time, if there's no more questions, to talk a little bit about the COVID-19 impact on the marketplace. Since we did this recording and we did the study, we actually have had much more data points coming in. And I think that one of the things that we learned in the last couple of months is that the market as a whole, especially for IT infrastructure, is surprisingly stable. And we, had many discussions about, when for the market as a whole, for servers, for example, we had predicted a couple of quarters ago about a 9% growth for 2020. And guess what? We're still not far off from that. I'm not sure, Vlad, if you want to add a bit of color to that.
Yes, one thing I would add is that we expect to see a shift in seasonality in how 2020 will develop. There was a stronger seasonality towards the first half of the year. And because of how 2019 turned out, which was the opposite, there was a very strong second half of the year due to macroeconomic headwinds in the first half. This would also create a very big difference compared to last year. So it's just something to bear in mind. The reason why the seasonality this year will be different is because there was a lot of preparation, both at enterprises and at service providers, for remote working, some anticipation of a demand raises in the first quarter, and we believe in the second quarter. So certainly there could have been a bit of a pull-in in demand. And also, we do expect that the enterprise will be significantly impacted by the looming global recession in the second half of the year. So a change in seasonality, but ultimately very robust overall growth for the market within this year, pretty compared to other markets, not that much affected by COVID-19 negatively.
Okay, we have another question here. And this is a question around plans to start OCP Day 2 operations training programs. And the question, if I take it in a bit more broadly, because I can't speak for what the vendors plan to do, the question really looks at the main reason why enterprises stick with OEMs and standard support contracts. And so my first impression from the discussions I've had is a number of reasons. One is they just need that level of support that the OEMs will give the enterprise. And right now, the supply chain around OCP certified equipment hasn't been able to step up and provide that level of support. Doesn't mean it won't in the future, and I have come across some organizations that are now improving and becoming closer to what the OEMs can offer. But it's really that evolution that we're still working towards, to have that standard support or enhanced support that many enterprises need. Vlad, I'm not sure if you're hearing anything else around that from your perspective.
I think this summarizes it pretty well. One thing that I would just add is that one thing that you should expect is, as vendors roll out new support, it doesn't happen globally at the same time. So we have seen that today there is difference between regions and countries specifically. Of course, as the market matures, most likely there will be a more even spread also of the data operation support. Cliff, I can see that we do have one more question from Brian Zansteicher. And sorry, Cliff, are you on the line?
Yes, I'm here. If you want to take a crack at that, go ahead.
So the question from Brian is, he referred to the slide where we discussed the drivers for adopting OCP equipment. And one of the questions was, why is electricity not quite that high in the list of drivers? And what I can tell you is, first, overall, we sorry, what is the question exactly? That OPEX tends to dwarf capex. So that's a good question. So the question is, why is OPEX less than capex? In a lot of situations, it's actually the opposite. I think that it's important to understand that our sample was a specific decision maker. So please do take it with a pinch of salt. But in terms of the capex and OPEX, here we are looking at a different overall initial investment from a support perspective, and that I think end users are signing up when they're buying the equipment. So it can be sometimes cheaper, but also they're thinking about the total spend in the long term. I think, instead of just the initial one. I think, Cliff, what else would you add to that?
Right, and I think that exactly as Vlad said, the drivers modify as time goes on, and up front, the initial drivers are what people are looking at. Is they see that initial capex savings and they think that could be the driver for them. Whereas, if they look at the longer term, then sometimes the OPEX becomes more valuable. But again, these are the responses of the audience, and sometimes it's also impression rather than simply the actuality. And so that could be part of the reason that this is coming out differently. And, the CAPEX being a large driver has been like that for a long time, even though I agree with you that when you add it all up, there are many other OPEX reasons for saving money when you bring automation into the picture. Okay, well, I think we're at the end of our time, and I think we're at the end of our questions.
You can always ask us more questions. We're both of us are on Twitter and LinkedIn, so if you have any other follow-ups, or you can, of course, contact the OCP team, but we're here to answer anything else.